and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Thursday, September 23rd, 2021, and I am pre-recording this Trading Places Live for just a little bit later this morning. Currently, currently we've got futures that are up pretty nicely. Dow futures up 172, S&P up 25, NASDAQ up 90. So it does look like we'll get off to a good start. This coming on the heels of the latest Fed announcement, which was released at 2 p.m. on Wednesday. The market just kind of went back and forth. We're going to take a look at that in just a couple minutes. In fact, let's go ahead and go through that agenda for you today. We'll start off with the daily market recap. Then we'll get into talking technically, breakouts and breakdowns, earnings spotlight, and then we'll wrap up the show with the three you must see, as we always do. First, take you over to earningsbeats.com. If you're not already a free member, we'd love to have you join our community. Just go to earningsbeats.com, scroll down, and you will see an area where you can sign up and subscribe to our Earnings Beats Digest. This is a 3 times a week newsletter, Mondays, Wednesdays, and Fridays. All you have to do is type in your name, email address, hit the subscribe button, and we'll get you set up. It gives you a pretty good sense of how we look at the market, looking at a lot of relative strength, looking at earnings and things that are tied to earnings like gaps. That's one of my favorite things to do, is to trade earnings gaps. So anyhow, we'll bring you up to speed on some of the things that we look at. I think it'll help in your trading. We try to make it very educational, so hopefully you'll learn some things in the from the newsletter as well. But definitely check that out. If you're interested, we do have portfolios that we select every 90 days, 10 equal weighted portfolios, and or 10 equal weighted stocks in each portfolio. And if you go into this historical performance, you can check it out. Having a pretty decent quarter here. Our model portfolio, which has been our longest running portfolio, it's been we started it back in November of 2018. You can see since inception up 217%, while the S&P is up just 63%. This quarter up a little over 1%. S&P's down just slightly. The aggressive has done extremely well this quarter, up 8.5%, even though the S&P 500 is down. And when we talk about quarters, by the way, it's the current quarter. We selected these stocks back on August 19th. So this is through the first month of this particular quarter. So we still have 2 months to go through November 19th, but that's what we mean by quarter. So if you're looking at calendar quarter or something, you obviously won't come up with the same numbers. But if you look down, I think we've got a pretty good long-term track record against the S&P, and we've been doing this. We started the model in the middle of the trade war, that Q4 2018 meltdown. And of course, we've had the pandemic that we've had to go through. So I think these numbers are pretty strong, but those are for members. So if you do want to check that out when you're at our homepage, right at the very top, you can start a 30-day free trial. So there's no cost. We'll have to do the credit card with this particular, with our paid service, so we can get you set up in our system. But love to have you check it out for 30 days. You can take a look at our portfolios. You can download our chart list if you're a member at StockCharts Extra or Pro member. If you're not, you can still view our chart lists. There's a lot of research. I won't go into it all today right now, but definitely check us out. Love to have you. All right, let's go into the daily market recap for Wednesday. Of course, the Fed did meet at 2 o'clock. Everyone was kind of waiting to see what would happen there. As expected, they made no change in rates. And they talked a little bit about interest rates possibly rising sooner than expected. There's now a majority of the Fed that's looking at raising rates some point in 2022. That number's up from the last meeting. So I think the majority were 2023, and now they're starting to move up a little bit. They also lowered their forecasts for growth this year, but then raised next year and the year after. So I don't know, market didn't seem to take too much from that. Again, we'll go through those. I'm going to go through and take a really close-up look at what happened yesterday afternoon in just a minute. But the Dow Jones yesterday did finish up 338 points. S&P up 41, NASDAQ up 150, mid caps 34, and small caps 21. On a relative basis, looking at the percentages, you can see mid caps and small caps actually outperformed, but we continue to be in this sideways consolidation. We've still got some work to do on our major indices, the Dow, S&P, and NASDAQ, all trading below their 20-day moving average. So the first thing you got to do is you got to get back up and take out that 20-day moving average. With today's futures this morning being up, maybe we get the NASDAQ through that 20-day. Let's see if we can hold. Same goes for the S&P, the Dow with some strength this morning. Maybe we'll go up and test that 20-day and see if we can get through. From a sector perspective, just about all the sectors were up on Wednesday. I believe utilities and communication services. Communication services. Yeah, I actually put these in the wrong order. Communication services was down for the day, as you can see here. Utilities, I think, also was down. The other 9 sectors were up, starting with energy, which is up 3%. Financials up almost 1.7, 1 2/3%. Technology, a little more than 1 1/3%. And then you got materials over here up more than 1%. So these were your 4 leaders. The one that I probably was watching the closest was technology, just because we got down to this area of support just around the 150, 151 level. Put in a double bottom and now starting to move back to the upside. That's good news. Bad news would be a breakdown below 150. So I would be watching that level very closely on the XLK. Moving on to the 10-year Treasury yield. As far as economic reports out today, we've got initial jobless claims out later this morning. Last week, 332,000. We're looking for 309,000. So a pretty good sized drop expected this week. Then later this morning, September PMI composite. The estimate there is 55.5. And then finally, August leading indicators. July rose 0.9%. August is expected to rise 0.6%. So a little bit of a decline from July, but still a pretty solid number. 10-year Treasury yield. I mean, there's really not a whole lot that's changed. Haven't had a whole lot to say about it because we really haven't done much. We did go down initially. This is another chart I'm going to look at in just a couple of minutes. I want to take a look at the 10-year Treasury yield on a 5-minute or 10-minute chart, just to show you what happened after the announcement came out yesterday. But you can see we were down quite a bit and then came back up and rose, finished up at the high of the day at 1.34%, but still in this range. So not really showing us a whole lot. Biggest takeaway here is if we break out to the upside on the yields, I would look for financials to lead. If we break to the downside, then I think your financials are going to lag. That's going to be one of the correlations that I would look for with the 10-year Treasury yield. So keep an eye on that. All right, let's move on to talking technically. So what I wanted to do first, this is a 5-day, 10-minute chart. And so at 2 o'clock yesterday, this is when the Fed came out. And I'd written an article. I could go back over here and I think it was in my Trading Places blog. It was Tuesday morning. I'm sorry. So it was two mornings ago. But I had gone through and basically summarized the last 10 Fed meetings and whether, what we had done in the 2 hours after the Fed announcement. So I've got the S&P 500 showing the S&P 500 right here before the announcement, and then the day of the announcement. So this would have been the high and the low over the next 2 hours and where it closed. And then I looked at the next 5 days, next full 5-day period. So looked over the next week, what was the high, the low, and the close. Down here were the percentages, which I think probably make a lot more sense. You can kind of compare. But I went through and I ran averages, and look at the averages. The close, the day of the announcement, the average is almost flat with where the S&P 500 was at the time of the announcement. So you get this knee-jerk reaction in both directions. But over the last 10 meetings, we've really had little change on average. And you can see the high and the low average is almost identical, 0.42 up, 0.40% down. So, not really a whole lot of difference there. And then you look at the 1 week after the announcement, you can see also not a whole lot of change on average. And the highs and the lows kind of vary, but again, not a whole lot of difference. So my point was that the Fed comes and goes, and it's, a big deal, and everybody's getting excited and everybody's talking about it. Bottom line is, last 10 meetings, we haven't done hardly anything. And if you go back now and look at what happened yesterday, we went up, we went down, we went up, we went down, and guess what? We finished almost right where we were at 2 o'clock. So once again, a lot of hype, but the market, and I think the reason why you're not seeing a whole lot of movement is the Fed is trying to be very transparent. The Fed tries to tell us what's going to happen before the meeting ever starts. So I don't really think the Fed announcement is that big of a deal. I mean, you can see the volatility picks up, and that's typical. We see these moves. You can see we went down, then we went up, back down, back up, back down. But bottom line, end of the day, really not a whole lot. Now, one thing I wanted to do, and I didn't have it set up. Sometimes I'll have these things set up for you, but I just want to show you. I wanted to do it live here so you can just see how to set up these charts, which I think is pretty cool. So if you come down here and hit price as your indicator, what I like to look at is, okay, an announcement came out. What kind of change was there between aggressive groups and defensive groups? So I'm going to put the XLK versus the S&P. I like line charts whenever I use any kind of relative price chart. Candlesticks just kind of make it wonky. I don't know. It's just not, it's just too much noise on the chart. So I just like the solid line. Then I just make the height 1.0 so that the height's going to be the same height as the actual price chart. And then I just do it, pick whatever I want. So I'm going to also pick, I'm going to pick the XLY, which is consumer discretionary. Same thing, solid thick line 1.0. And then I'll throw in, I could put them all on here, but I'm not going to, just in an effort to save some time. But let's pull up a couple of defensive groups. So let's get the other consumer group, staples. And the whole idea here is just to see, the market reaction after 2 o'clock. What happened? And, is it something, that we should be watching going forward, or was there really not much to even consider? And then we'll take a look at, say, the utilities, which is kind of defines the defensive group. All right. So I'm going to go ahead and now I'm going to change the height here to 1000 just so get a little bit bigger chart, and then see if we like the chart. I'm going to make it even a little bit bigger. We're going to make it 1500 here. All right. So here is, and I'm going to also annotate so we can make it really simple here. So I'm going to take a vertical line, draw it right here at 2 o'clock so that we know about where, we know exactly where the Fed announcement was made. And then you can kind of see what happened. Okay, so here with the S&P, we went up, we went down, we went up, we went down. We already talked about this, finished almost right where we started. Look at technology, though. Technology over the course of the next 2 hours was almost straight up on a relative basis. So while we saw this back and forth, we initially saw that, but into the close on a relative basis, technology was holding up much better than the overall market. The consumer discretionary group actually finished higher than where it was at 2 o'clock. So we got relative strength in both aggressive groups. That's good. And then from the defensive areas, look at consumer staples. Defensive getting hit and utilities getting hit. Now, the reason I do this and draw up the 2 o'clock time frame is we have new information. Now, it's mostly already been communicated to the market because, as I said, the Fed tries to be very transparent. But this is new information. So I always like to see what the stock market does when it gets new information. That's why I follow the earnings so closely and what happens after earnings reports come out. Because the market, Wall Street, has new information that it's starting to trade with. And it's comparing stock A versus stock B and stock C. And if it's putting, if that stock A is going up on a relative basis, it's telling us that Wall Street, which has a lot more access to information than we'll ever have, Wall Street likes a particular stock if on a relative basis it's doing well. Well, here's more of an overview of relative strength looking at the sectors. But this gives me a little bit of warm and fuzzies just knowing that after the announcement, technology and consumer discretionary performed well. It wasn't like Wall Street said, oh my gosh, new news is out and we really need to get away from the aggressive areas. That's not what happened. So I find this to be at least, bullish to some extent. I mean, I'm not going to pin all my hopes and dreams on 2 hours, but you know, I'm thinking that the market's pulling back and we're going to rally again. And that's kind of a little bit of a clue to me that based on the new information, Wall Street still favors technology and consumer discretionary. And I'll continue to watch that as we go forward. Now, if we go up over the next 2 weeks and technology and consumer discretionary underperform, that's not going to make me feel very good about the rally. So again, it's just a start. I wouldn't read too much into it, but I just wanted to show you how I do that. All right, breakouts and breakdowns. I'm also going to spend a little bit of time here showing you how you can do this as well. So from the dashboard, I mean, the best thing to do is just go down to your scans. If you go down under your dashboard and you don't see your scans anywhere, then you need to go over to this little gear shift here. When you click on that, it will tell you whether or not. So if you've got, for instance, scans and alerts, if they're not checked, and you come down and you look for scans and alerts, you're not going to see it. It's like, wait a minute, I don't have scans on my screen. Well, you got to go to this gear shift and check, make sure you have that. All right, so once you've got that done, and then you come down here to the scans, under more, you can set your own scan up. I have a bunch of them that are saved. You can hit new scan and do your own scan, but I use the predefined scans a lot. I find several of these very useful. So a lot of times the 52-week highs, they're already set up. So I can do the 52-week highs. Let's say I want to see what the 52-week highs were on NASDAQ. So I pull this up. Now, if you don't know how to run a 52-week high scan on the NASDAQ or any of these scans you pull up, if you don't know how to write the scan, you can click here. This is a really cool feature. You can click here to edit the scan. So now you can look and see exactly what is on here, and whether or not you want to, stick with what's here. Like, I'm not interested in the over-the-counter bulletin board, so I would take that out. So I got type of stock, I got the NASDAQ, 20-day daily volume greater than, average volume greater than 40,000 shares. Well, I'm going to want, 200,000 shares. Maybe I don't need that much. And then this is what's giving you the 52-week high. Daily high is greater than yesterday's daily max, 253. So let's say, you didn't want a whole year. You just wanted to know if maybe over the last, I don't know, each month is 22 days. Let's say 3 months, 66 days. So that'll give you like a 3-month high. So see how I'm changing all of this to, I just started with the default that StockCharts gives me, which I think is pretty cool. Now I can run this scan, and this will give me the 3-month highs. Now I have 59 of these. I got rid of the over-the-counter bulletin board. I can sort them if I want. But let's just take a look at these. I'm just going to flip down. I'm just going to pull up a couple of these that are maybe not as high on the scooter. Because if you get a scooter that's 99.8, chances are it's been going up for a while to get that kind of relative strength. So if I've got a stock that's breaking out to a 3-month high and it's got a lower scooter, maybe it's just getting started. Now, travel and tourism is one group that I gave to members 2 days ago that I think is starting to show a lot of strength. So I find this one, Booking Holdings, particularly interesting just because it's in this group with a low scooter score. So I'm going to pull this one up. And it is making an interesting breakout. Here off of the top, I see an inverse head and shoulder, left shoulder, neckline, head, right side of the neckline, pull back to the 20-day, and then the breakout with increasing volume. So I like Booking Holding. I think this one's going to go up and challenge that 2,500 area. Maybe we get the breakout. So Booking Holding to me is an interesting candidate. And then you can go in and, I don't know, maybe look for another one that's got a low scooter score. Here's a biotech, 59.9. Some of these biotechs can be pretty back and forth. This one definitely looks like it's beginning to uptrend. We got that golden cross, the 20-day over the 50. So if you're looking for, 52-week highs, you're going to be seeing a stock that's obviously above, the highs are above anything else you see on the chart. But remember, I switched this to 3 months. So now I'm looking at only at stocks that are setting new highs for the last 3 months. And that's why we see NKTR on this list. But this is one that's starting to strengthen. So it just depends on your own style and strategy. And, do you like to catch stocks that are maybe just starting to turn up? Or do you like to catch stocks as they make breakouts to a 52-week high, where you got lots of momentum that's been going for a while, maybe a strong scooter score? Everybody's different what they're looking for. But no matter what you're looking for, you can find it at StockCharts. And one of the best ways is to go back and use these scans. So all right, so that's the 52-week high. So that's how you can find some breakouts. You can go down here to 52-week lows. So let's do the same thing, NASDAQ. I'm going to go ahead and leave it as 52-week low, but I'm going to get rid of the over-the-counter because I really am not interested in that. And then also I'm going to change the volume. I'll just put it up to 100,000 just to make it a little bit more. Leave it at 253, and I'm going to run this scan. Now, there were 39 before. Now they're 37. So I only knocked out 2 of them. But then on the breakouts, you can see, again, here's your scooter. Now, most of your scooters are going to be low. Why? Well, you're at a 52-week low. The S&P's been setting new highs all year. So on a relative basis, you should be seeing some pretty low scooter scores. But the higher ones are ones maybe that just broke down. So I'm going to look at maybe this one here, CSII, because it's got a scooter 25 and maybe it's just breaking down. And as you look at it across here, you can see it technically it is breaking down, but I like that reversal, right at this support area. So it set a new 52-week low, but who would have been buying it on a 52-week low? I think the only way you buy this and you bring it back up to 34 would be market makers, maybe trying to accumulate shares for an institutional client, maybe just for their own account, short-term trade. But it looks to me like CSII potentially could have bottomed with this hammer. So looking at this, I was thinking bearish thoughts, but as I look at it, and again, I like more momentum trades, so I'm not a huge fan of trying to catch a bottom on a stock that's been underperforming. But many do like to catch stocks that reverse at key support levels. So this is one to watch. I mean, if I did anything with this, it'd probably be a small position and anything below that tail to the downside. And we could look at this. Yeah, very early in the day, volume was only 20-some thousand shares. I'd be more interested really if it fell much below 33 1/4, 33.50, which is where it ended those first 10 minutes. That would bother me. I don't know that I would give it all the way down to this 32.50 area. I'd probably keep a fairly tight stop in case this started to go against me. But anyway, that's how you can find breakouts and breakdowns simply using the predefined scans at StockCharts. So I think that's pretty cool. All right, earnings. So some companies out with earnings. Let's pull up the first one I wanted to look at here, which is BlackBerry. They were out yesterday, and we can take a look and see what they're trading at pre-market here. So BlackBerry up more than 8% after reporting earnings yesterday. They simply matched estimates. They were expected to lose 6 cents. They lost 6 cents. But maybe it was more of a relief rally that they didn't underperform or miss their earnings estimate, because the stock's been down ever since that high back in June, been trending lower and lower and lower. Today, it's getting back up 1033, but you can see that's right about where the moving averages are. I don't know. I'm not a big fan of BlackBerry, and personally, I would avoid it. Another one is KBH. So they reported they did beat $1.64 on their bottom line versus $1.60. And they are being rewarded by a whopping 0.24%. KBH been trending lower. I think got to get back through 44 1/4 before I would be interested, or testing the support level. So we're right in the middle right now, and with earnings, doesn't look like we're going to get a big pop one way or the other. And the last one is FUL. So this is HB Fuller. They're up 2.68% back to 62.05, but that's only going to take it right back here, still below the 20-day and downtrending. So I don't know. I wouldn't trust this move to the upside. They did beat 79 cents versus 77. We'll see, but I'm just a little concerned about the downsloping. If I pulled this chart up and I put it on a relative basis, I think what we're going to see is some relative weakness here. You can see versus its peers, It's actually moved down to about a 6-month relative low heading into its earnings report. So it's getting a little bit of a gap up, but if it can't get through the 20, if it fails at the 20, I'd actually look for the stock to come back down and test the recent low. All right, two others that reported this morning. I have not seen their reports, or they're scheduled to report this morning. I don't know if they have yet, but we'll see if they've. Well, we've got Accenture up 2.49%, so I'm assuming it came out with earnings. It's been in a beautiful uptrend. This stock, I think, has been, pretty much a fan favorite in its space. It was expected to earn $2.19. Again, I don't know what it reported or if it reported, but it seems maybe that it's reported based on being up 2.5% this morning. The other one that I'll just bring up is Darden Restaurants, DRI. This one's up 4%. And looking to make a breakout. This is a pretty big deal. I want to pull up a long-term chart here. Yeah, so we came up here, we made the breakout heading into earnings, pulled back onto the 20-day. Now we're getting earnings and we're gapping up. I think Darden Restaurants looks pretty interesting. I like the AD line moving up to new highs. It's been moving up, even though mostly going sideways. The AD line's been moving up. I think there's been accumulation here. We're getting the earnings report. I'm assuming we got it this morning. They're expected to earn $1.63. Again, I don't know what they earned, but $1.63 is the expectation. I'm assuming that they beat it, and we're looking at a potential breakout. Any open today, by the way, above 153.08 would be the breakout. And again, if we go back into this, so 153.08 currently. Pre-market 156.40. So it looks like we're going to get that breakout. Now, just because we gap up, I do think that that's a bullish thing to gap up and break out with earnings. But the reaction initially, we could easily see this come back down, fill the gap. We could see it come back down just to 153, 154, maybe that 153.08 breakout level. We could see it come back, test that level. We could see it. I mean, we've seen it so many times. We might see the gap up and come all the way back down to the 20-day. Before turning back to the upside, or just have a failed breakout. I don't think we're going to have a failed breakout on this one simply because of all the other signals, the AD line and so forth. All right, let's move on to the three you must see. I wanted to start with Facebook. So, and we'll bring it up on a relative basis. I'm just going to go through these pretty quickly, but Facebook yesterday went down and closed, even though the market was up. We saw Facebook go down 4% and close at its lowest level in a couple of months, failing to hold this gap support area that it had been holding. So I'm looking at the next area of support down here to about the 335, 334, 335 area. That's what I would expect next. I would be watching maybe for some sort of reversing candle on Facebook. MGM, I'm only bringing this one up because gambling stocks have been horrible, but look at MGM. MGM's not far from a breakout. This has been a great stock on a relative basis versus the gambling. Look at the MGM. It's been going up against the gambling index. This is one of your leaders in that space. It's just been a horrible space. AD line near a 52-week high. So it's almost like while all the other gambling stocks are getting hit, MGM's being accumulated. Last one is COP. This is ConocoPhillips. Made a big move here over the last couple of weeks, and it went up in its testing key area at 62.50. So I don't know if we get through it or not, but at least we're getting a test. Volume's been picking up. Like to see the AD line do a little bit better, but relative strength has been very strong. This has been a leader in the energy area. All right, that's it for me. I appreciate everybody tuning in. This is the last Trading Places Live this week, but I'll be back Monday over at earningsbeats.com. You can go over to Earnings Beats. Check on, Monday morning, right around 8:30 or so, go into, or 8:45, click on Trading Places Live, and you'll be able to come into the room. Everybody have a great rest of your week. Enjoy your weekend. Let's see if the market can continue to regain its momentum. Have a great day, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.